Stock of the day. Thought take a look at Super Retail. Reported pretty well during the earnings season. In fact, on the call a week or so ago, I think it was Scott Phillips and Mark Morland were saying they think a lot of the bargains in the share market are retailers, and in their top three they had Super Retail Group. But today we get news that Super Retail Group Managing Director and Chief Executive Officer Anthony Hegarty has sold 87,000 shares in the company on market to fund a tax payment related to the exercise of vested performance rights. Now the company notes following the sale, Mr Hegarty continues to hold 252,000 ordinary shares and 340,000 performance rights. Shares are flat today, but Carl, do you take any notice of that, of when managing directors have to or start selling their shares? Now he gave a reason to meet a tax bill, and does that calm you down, or
No.
or do you think Super Retail is at the peak now and time to get out?
Look, I do. To answer your question, I do take note of it. So anytime I do analysis of this show, I literally go and download all the company's announcements for the last 12 months, and I pay very close attention to to director sales and purchases. Yeah. Now, to counter this, one of the other directors bought 20,000 shares, only 200 grand, Koshy, back in November at $10. A really good trade though, because obviously the price got up to $13.50. Now, interestingly for Mr. Hegarty, that he sold between 22 to 24 February. Koshy, that was the top. Like, he nailed it.
Right.
I mean, isn't it great to know exactly when to sell?
Yeah.
I wish I had his foresight. So he nailed the absolute top of his run. But yeah, sometimes I will take it with a bit of a pinch of salt. Tax bills, I think he just wanted to get out, to be honest. So just on the history of these performance rights, and if viewers aren't aware of what a performance right is, they're effectively a gift of shares. That's the wrong way to put it.
A bonus.
They're a bonus. Yeah, that's a bonus / gift. Goshy. So if you achieve whatever is in the conditions of that performance base, you make so much a profit or grow the stores, I don't know, whatever it was, you get given these shares at zero cost. That's why I call it a gift. So he was given 63,527. He worked hard for them, of course, back in November. So that was $825,000 worth. And then he's just vested another 13,000 in this batch. So if you add together what was vested in November to what has just been vested, it's about $1 million, Koshy.
Right.
So that reflects the sale. So of course he rounded it up. He didn't round it down because the value was 1.1 million, but that's effectively what's happened. So I don't think there's anything so sinister there. Literally, he's got him.
Yeah.
And he wants to crystallise, I guess, some of the hard work that he's put in. So
if you're a Super Retail investor, what are the charts telling you? Stay in it, buy some more.
I think stay in it. Yeah. So because I can draw a line between where these shares came from, I can't fault his timing though. Yeah. But if it was just out of the blue, so if it was just if these performance rights hadn't vested within the last couple of months and it was just straight out of the blue, then I'm more concerned. But I can kind of see where this came from. Otherwise, the business looks very, very solid. The half-yearly report was very good, maintained margins, grew sales, outlook very, very solid as well. Valuation-wise, I did run this through my valuation filter. It's after this run, it's looking pretty fully priced to me. That's what I'll say. On the chart, the third piece of the puzzle, it looks very good. I can certainly get to a hold. I'm not sure if I'm at a buy because it is at a level which was a big resistance point in the past, and coincidentally, that's where our director is sold as well.
Okay. Michael, what do you think of Super Retail? Question number one, do you think the bargains are in the retail sector? The argument was they're on really single-digit multiples at the moment.
Yeah.
Now, we had Gaurav and Mathan on earlier in the week and said that's a trap if you're looking at retailers. You should buy them at high multiples rather than low. So I'm a bit confused with this. Do you think retail is a good place to be at the moment?
We're cautious on retailers at the moment. We understand, that looking back, there's actually some decent numbers, and it's quite fragmented at the moment, the retail space. There's some retailers delivering very good results, like Super Retail, and some starting to struggle already. But we do worry a little bit about the outlook in terms of interest rates and that big cliff that might come and affect consumer spending. So we think there's a too big a unknown out there to get too confident to start loading up on the retailers or consumer discretionary in general.
See, Junbei Liu on Friday said retailers, their current position is masked by the fact that they're reporting for the December period.
Yeah,
she reckons
that's right.
It will come home to roost when they report on the March quarter in May.
And that's what we're probably leaning towards as well.
Right,
There was a big, strong finish to the year last year, a really big Christmas. Everyone was spending big. So people still had a lot of savings. The interest rate bites really hadn't started to come in just yet. So that's something you want to be conscious of with these retailers. And it's a bit like mining companies. You kind of want to buy them on higher multiples and then sell them on lower multiples. Because basically what the market is saying is that they don't really believe today's earnings for these retailers, that they think that they're going to come down over time, and as the earnings come down, those multiples will expand and the prices will fall as well potentially. But from our standpoint, Super Retail is very high quality, reported very well. The Macpac division is really emerging quite nicely for them. So they've got Macpac, they've got the Super Retail or Super Auto, and then they've got Rebel Sports as well. But the one that's growing the quickest is this Macpac division, which is outdoor attire. So it'll be interesting to see if that continues. But for us, it's not one we hold, and I'm not going to hold it at the moment. Because, just a bit concerned with that outlook. But the momentum does look good, so that's the one thing it does have in its favour.